Precisely. So 100%, Harry. You put
Hmm.
it beautifully. I always say that gig workers deserve more. They work tirelessly. They are the backbone of our economy ever since the pandemic, and we somehow have failed to give back to them. It works on the activations as it works with banks. A person that has consistently, with thousands of reports in a ledger, reported that they are dependable, that they are consistent, that they
Hmm.
are well organized, that they are hardworking. Those people
Yeah.
deserve better when it comes to deactivation and when it comes to financial products, from insurance to credit cards to loans.
Welcome to the Rideshare Guy podcast, where you will learn about the rideshare and mobility industry straight from Harry Campbell, who's got over 5 years experience covering the industry and has talked to thousands of drivers. There's no better place to stay up to date, entertained, and educated. So let's dive in.
All right. So Jose is the founder and CEO of Bankuish, a technology platform that makes it easy for gig workers to access financial services. He got a start in the industry leading a series of fintech startups, including Atlas Money, Access Network, and FiClub, and managing impact investments at GCH Partners. Jose is a chartered economist, former banking executive, ex-diplomat, and holds an MBA from Universidad Internacional Menéndez Pelayo in Madrid. He believes deeply in the role of technology and business as tools to solve the world's most crippling inequities. How's my Spanish?
That was great, man. That was great.
All right. Yeah, I actually didn't realize. I think I briefly read your bio and didn't practice it. And usually I'm pretty good, but the change of language was a little bit of a surprise for me. Luckily, I grew up in LA and lived in San Diego for a few years. So I'm not an expert in Spanish, but I know a thing or two.
You did great, man. That was better than normal. I always like to throw those curveballs.
I love it, and I think it's a perfect segue because you guys are a LATAM based company. So we're going to be talking all about Bankuish today and what the company does. So give me the quick pitch, 60 to 90 seconds on Bankuish and what you guys do, where you're operating, things like that.
Yeah. So Banquish, our mission, because I think it's the most important thing, is to
Hmm.
bring dignity to the financial lives of gig workers around the world. Right now, we were born 3 years ago. We're a US company, but we operate in Mexico. Then we grew into Chile and then to Brazil. So we are very much a Latin focused company. But we very much believe that this solution is a solution that works and we have the obligation of trying to bring
Hmm.
it to as many gig workers as possible. What we do is how we bring dignity to the financial lives of gig workers is by turning their data, the enormous amounts of data that they're accumulating in their gig platform accounts, turning that data into an alternative credit score that is currently being used, is currently being accepted by the largest banks of Latin America.
Got it. Very cool. So I think this is definitely something that in the 10 years I've been covering the industry, we always hear from drivers that gig work is not traditional work, right? There's obviously all the fancy stats about everyone's turning to gig work and the sector is growing, but there's some areas like banking where it's much more difficult to get a loan, to get a car. I would say to get a house, but houses are expensive here in the US, so it's tough for gig workers to afford those. What do you think is kind of the main value draw? If folks are using Banquish, what can they now get or have access to that they couldn't get before?
Yeah. So the main products, the revenue drivers of Banquish are the origination of personal loans,
Mhm.
securitized lending, so either vehicle financing or an asset-backed loan, so giving you a loan using your vehicle as a collateral, and credit cards and insurance. So we've been growing a lot our
Hmm.
insurance portfolio. We are focusing on insurance policies that cover a percentage of your aggregate average monthly income for up to 3 months in case of accident or sickness.
Got it. Very cool. So let's talk a little bit about the LATAM market for a second. What do people need to know? Maybe if they've been focused on US ride hail market, Uber and Lyft, pretty big, but we've got LATAM just to the south, and I know it's a hot and growing sector. So what's sort of like the quick intro to LATAM in the context of gig workers and the platforms that you're working with?
Yeah, so there's the good and the bad. I'll start with the good and then I'll tell
All
you a
right,
little
I
bit
like
about the
that.
bad. So the good is that gig work has boomed. It has ballooned. It doubled in size during the pandemic in Latin America.
Hmm.
It has grown dramatically and has actually driven huge global gig platforms into net positive quarterly reports thanks to their growth in Latin
Hmm.
American markets. So there is a need and there is the potential for many earners to for many gig workers to make a living with this work and being owners of the schedule. So that's the good. I've spoken with many gig workers in Mexico, in Brazil, in Chile, in Colombia, and everyone tells me the same thing. I used to be an accountant before the pandemic. Then I started with Uber, with Didi, whatever. Now I get to choose when I'm with my girlfriend or my children, and I am the owner of my schedule, and I am not going back. And that's something I get very often, and I love that it's thriving in Latin America. Now, the bad is that they do not have a salary. And the financial industry in Latin America has two unfortunate things going on. One is that they're very traditional. So their risk models, require you to have a background in the credit bureaus, and most of gig workers do not, or have a salary to give them the confidence that you will be stable in your ability of repayment. And again, they don't understand very well the idea of your income varying, not just because you could be working the same amount of hours every month, but your income could vary because the price per transaction per ride could vary. So they're having a hard time understanding that. And I get it, they have our monies in their savings accounts and they need to be careful, and it's a new thing for them. The other thing, which is really unfortunate, is that a lot of these markets, so for example, Brazil is the largest market by far in Latin America, Mexico, second largest. They are huge in Latin. They take over half of their economy. And these markets do not have usury caps. So in the US, any lender that wants to offer you a personal loan has a maximum APR that they can charge you. Anything beyond 35% is illegal. This is not the case in Brazil, Mexico, most of these markets. And it puts our users, it puts our gig workers in a place where if they're being rejected by formal banks because they don't have credit history and they don't have a salary, they're having to be forced to go to the thriving, ballooning, predatory lending ecosystem that is being born out of this need. And our users, we have we have a lot of WhatsApp groups and Telegram groups with our users. And we have this thing going on where we name every month, the winner of who finds the worst financial product that they're being offered. And the annual interest rates go from 400% to 2,000% annual interest rate on these loans. Absolutely impossible, harmful products where, if you're in need because your car breaks down, you need to fix it because it is a source of income for you and your family. You'll get this loan and you'll spend months only paying compound interest.
Got it. So, I mean, we do have the sort of payday loans here in the US that I think are somewhat infamous for 200, 300, 400%, basically APRs. Is that, you said that it's illegal to charge above 35%? What is the difference there in kind of the US context?
Yeah, so the US has a similar problem. So there are 69, similar in that they don't get to 2,000%. So there's that difference, but similar in that it is hurtful. There are these financial tools that are hurtful simply because traditional, formal, respectable financial institutions do not feel comfortable with the income models of gig work because they're not used to them yet, which is the whole work and value proposition of Bankuish, is we turn all of this data into the old school risk profile that banks consume. I was going to say that I used to work with. So I'm a chartered economist. I used to be responsible for risk in several banks in Spain, and which was acquired by Santander Bank and ING Direct and just different banks. And across the world, banks use the same risk profiles. They need one of the first things you need when you give a loan is a salary range. What is Harry Campbell's salary range? And if without that, they don't know what line of credit makes sense for you. They don't know what principal amount of a loan makes sense for you. So not having a salary range automatically breaks their system. It's like they're not compiling. So we turn your aggregate average monthly income of all of your gig platform apps. We draw a Bollinger diagram where we choose the median and average, and we try to give a stable look, an honest look at your salary range. And then we give them a salary range that is built upon all of this massive amount of data. And the same goes with many other metrics. So in the US, when gig workers don't find the products they want from the main banks that are offering respectable financial products, they're being forced to do two things. Either stack up credit cards. So even though a credit card has a maximum APR of 35%, if you use another credit card to pay off the first credit card, you're compounding interest of the two credit cards. And suddenly you're multiplying your 35% with the other 35% of whatever the principal amount you're repaying. So you've just increased by orders of magnitude the amount that you need to pay in interest. And if you do that a couple more times, you have a problem where you're in the hundreds of annual interest rate. And then the other one is payday lending. So payday lending, again, does the same thing. There is still a usury cap, a limit to the interest rate you can charge. but payday loans compound these interest rates in a similar manner in a single package. So they are dangerous products that I never recommend, but sometimes you don't have an option. Again, the example of your car breaks down.
So let's talk a little bit about your product. I mean, typically, I think people think of credit scores. It's kind of based off of if you have how many inquiries you have. And I think what you're basically saying is that if a driver has a low credit score, it may not be a good indicator of how creditworthy they are because they're working now in the gig economy. So what are the factors that you use? I imagine that it's like how many hours they're working, maybe the number of services, the number of rides, and then of course, like what their net income. I mean, they're all kind of related, but what are the underwriting criteria you use for your credit score for your product for gig workers?
Of course. That's a fantastic question, Harry. So just first, I want to dispel the idea that credit scores are very complex. They are not. So FiCo, TransUnion, Equifax, Experian, they all offer the same thing, which is your ability of repayment in their experience is based on your past ability of repayment. So your repayment history builds the majority by far of your credit score. And the problem with a lot of gig workers is that they might not have a formal credit history. So they might have never had a loan with a formal bank, so they don't have a history. Because again, these credit bureaus get their information from the banks, not from these predatory lenders. So a fintech might not have a partnership with FiCo, but most banks do. So that's why FiCo doesn't have information from whatever loan you had from whatever fintech. So that's first. So what we do is we change the narrative. So we've worked very closely with Experian, which is the owner of Serasa, which is the by far main credit bureau in Brazil. We've worked closely with TransUnion, which is the owner of Buró de Crédito in Mexico. So we work closely with these credit bureaus because they realize they have an issue. They realize that a lot of their massive percentage of gig workers do not have, so they have what they call a thin file or no file in the credit bureaus. So thin file means they don't even know you. They don't have any information. I'm sorry, no file means they don't even know you. They don't know anything about you. Thin file means they know you, but they don't have any positive data. So positive data is income data, asset data, address change data. So data that is positive. They only have maybe negative marks. So maybe a telecom has reported them that you missed the payment of a bill 3 years ago. And this is a big problem for them because they want to be able to offer products to these people, but with assurances. So we help. We are a ramp into the formal banking ecosystem. And how we do it is 3 verticals. There's a fourth one, I guess four verticals. The first one is income validation. So the examples I gave before of giving a salary range according to your aggregate average monthly income, drawing those Bollinger diagrams, trying to assess how much it varies from week to week, from month to month, and help banks understand how dependable that income source is.
Got it.
So income validation. The second one is asset validation. So a lot of gig workers own their vehicle. That's an asset. They might own their home, or they might own we get information on their cell phones. So we know the model of their cell phone, the model of their phone. And that helps banks understand that there's assets there. So there's a certain weight. And then third one is what is called in risk stability profiles. So stability profiles is we can see that Harry works from 8 a.m. to 6 p.m. from Monday to Saturday, like a Swiss clock every week. Jose, however, will work 20 hours a day for 5 days and then don't work for 2 weeks, and then it's more chaotic. That stability is helpful. The knowing that you're always operating around the same area is also helpful. Is the equivalent of having changes of address very often, etc. This kind of information of stability is very useful. It is also useful in LATAM, particularly against fraud prevention. So we call it stability profile, and then identity validation is kind of like the last vertical. And identity validation is an extension of that, where essentially every transaction, I always laugh when they say, well, I can't trust an Uber driver. I don't know who they are. And it's like more about an Uber driver than about your own clients, because an Uber driver, every transaction of an Uber driver is someone validating their face, their name, and their license plate. So that identity is being validated several times a day. And that actually has been helpful, because credit fraud is a bigger issue in Latin America than in the US. And we actually have very little of it because our users are verified.
Gotcha. So I think the three vertical, I really like this concept where I think what the gist of what you're saying is someone who's a good driver, who's reliable, who has been earning consistently, they're not going to throw it all away, right, on a loan, right? And I think we see this come up time and time again, especially in the US with deactivations, like unfair deactivations. When the company passenger complains, oh, this driver was drinking on the job. And you're like, this driver has 25,000 trips and a 5-star rating and has been working 40 hours a week for the past 3 years. Why would he be drinking on the job? Is it possible? Yes, but the likeliness is very low. And so I think there's multiple kind of avenues where this model, but I guess the gist of it is like kind of what you described, like how reliable, how stable is this person? And now let's use that to underwrite either a loan or maybe in the future it could underwrite and help with unfair deactivations and other verticals, right?
Precisely. So I 100%, Harry, you put it beautifully. I always say that gig workers deserve more. They work tirelessly. They are the backbone of our economy ever since the pandemic, and we somehow have failed to give back to them. It works on deactivations as it works with banks. A person that has consistently, with thousands of reports in a ledger, reported that they are dependable, that they are consistent, that they are well organized, that they are hardworking. Those people deserve better when it comes to deactivation and when it comes to financial products, from insurance to credit cards to loans.
All right, Jose. So this sounds like a no-brainer. So you know what my next question is going to be. Why don't we see this everywhere, all over the world? Why doesn't every gig worker have access to it right now?
Yeah, so they will. The short question is they will. The short answer is they will, Harry. We will be entering the US market in the first half of 2024. So we're half a year away from seeing this in the US. Our technology works in the US. We've beta tested it here. It's a question of when the company was starting 3 years ago, when I analyzed the best places for us to try this model and see if it stick, I wanted to make sure that we stress tested it in the hardest possible ecosystems. And for us, Latin America, the Mexican and Brazilian market were great for two reasons. One is because the aversion of risk of the traditional banks is much higher than in the US. So there was a higher barrier, a higher level.
Is that because lower income, more fraud, or?
Well, no, it's mainly because there are very few banks. So I'll give you the example of Brazil. Brazil is the 8th economy of the world and somehow only has 5 banks. The US have thousands of banks. So these 5 banks, when you speak to them, they tell you, it's like they don't need to serve these underbanked communities of gig workers. They don't need to, because they have trillion-dollar government contracts and huge things, and they just literally live off of 30% of the population. And the other 70% is just underbanked or unbanked completely, which is why you've seen booms like Nubank and other fintechs just take over, because they realize that these large, huge banks, I mean, Nubank is one of the most valuable banking institutions in the world. It was born a few years ago in Brazil exclusively because the Brazilian banks couldn't care less about the user base of other communities.
So selfishly, I want to take advantage of you while I have and learn a little bit more about LATAM. So you've mentioned Brazil, Mexico City, Chile. What do I need to know about LATAM? Are the biggest, I feel like I've seen some stats like Mexico City might be one of Uber's biggest markets. Like, what are the big markets and what are the big players that you guys see in LATAM and who you're working with?
Yeah, so the largest markets when it comes to gig work they're in parallel with the size of the GDP of these countries. So you're seeing kind of like a homogeneous way of growth of gig work according to the GDP of every country and the population of every country, which is also directly proportional. So the largest one is Brazil. The second largest one is Mexico. Then you have Colombia, Chile. Argentina is a little bit of a kind of like on its own because there's just a very tumultuous economic situation there. So it's large, but it's hard to quantify when the price of the value of the local currency is swaying 100% in a year. So when it comes to there, the largest players are Uber, Didi. The US market is not familiar with Didi, but Didi is a huge giant. Didi also in Brazil acquired 99, which was the most popular ride-hailing company. We have Rappi. Rappi is the largest courier system in Latin America, but it was somehow dethroned or pushed out in Brazil by iFood. iFood has basically a monopoly on courier delivery in Brazil. Otherwise, Rappi is the king of most of the other markets.
Got it. And when you say Uber and Didi, are you referring to both rides and food delivery, or how does that break down? Like, who are the big, are Uber and Didi the big ride hail? And then I know they also do food delivery too.
Yeah, so they're the big ride hail. Their food deliveries are not negligible. They are serious contenders because the LATAM ecosystem is much more fragmented than in the US. So you have Pedidos Ya, Beat, La Move. You have a dozen of gig platforms
on the ride hail side.
On both ride hail and courier services. So there's when it comes to ride hailing, the big ones would be Uber, Didi, Cabify, Beat, Lalamove. There's a series of big ones. When it comes to delivery, you have Rappi and iFood, but iFood and Rappi in the case of Brazil. You have Pedidos Ya, there's also a pretty fragmented ecosystem of gig platforms.
Got it. Yeah, no, I think that's helpful. And the reason why I ask is I've seen in the US on the food delivery side, on rideshare, Uber has about 2/3 market share, Lyft has 1/3 on food delivery, DoorDash has about 2/3 market share in the US, Uber Eats has 1/3. But I saw an interesting interview with Uber CEO Dara Khosrowshahi the other day, and he was really hyping up the fact that Uber Eats globally does more revenue than DoorDash because DoorDash is only in the US, right? I mean, I know there's more of a fragmented food delivery market out there, but it sort of just highlights, like, I think sometimes people forget that Uber operates globally. They're a pretty big food delivery player and around the world. So what part, I know you guys have made a lot of headways on the partnership side with these platforms and the bank. So can you talk a little bit about what platforms you're partnered with and sort of how that ties into the banks?
Yeah, I can only go into specifics in those partnerships that are public,
Sure.
but in general, what I'll say is we have managed to partner with all of the major gig platforms in Latin America, and we believe in partnering with the gig platforms. We don't think that we need to pick sides to be able to deliver value to gig workers. We believe that we have found an elegant solution that helps the banks underwrite with a lot of safety financial products to this new community of what I call the future of work, which is the gig work. We can deliver value to gig platforms because they suffer when earners cannot. Yeah, sorry.
No, keep going. I love the train of thought you're in. Keep going.
Yeah, so we have spoken and we have worked alongside many gig platforms, and they have come with the issue themselves where sometimes they will realize that a lot of their earners need larger loans. They cannot give loans, like, for example, Rappi has a bank to be able to give microloans to their couriers. They actually literally got a bank inside the corporate system, but they discovered that if they give too large of a loan, many of the regulators would see that as a salary advancement, which would make them look like an employer, which would kind of jeopardize the whole model. That is something that has been explored and suffered by almost every single major gig platform. We help them because when they partner with us, they're not partnering with one neobank. We don't do loans. We don't do products. What we do is we underwrite, we're essentially a channel that helps them connect with all the major banks in the region.
Got it. So I think we've definitely seen from a lot of the companies that are sort of trying to partner on the B2B side with platforms that, one, there's some good value to the platforms because you can kind of separate that employment independent contractor issue, which sounds like is pretty relevant all over the world, not just in the US, right? So there's sort of that kind of intermediary. And then number two, I mean, what is the actual problem that you're solving for earners that the platforms care about? I mean, like, why, if I'm a platform, do I want to give access to a Bankuish loan for my drivers, basically?
Yes. So they would rather, for example, this is something real. Many gig platforms in the region right now have more earners than they have vehicles.
Got it.
That's an issue. It's a big issue. And I always say that for gig platforms, we do three things. We help them with stickiness, because when they are the ones doing a co-promotion with us, it drives a gig worker to go from green to gold to platinum to diamond in that platform instead of staying with the Rappi.
Extra benefit.
Exactly. So it's an extra, we drive stickiness. We drive alternative sources of revenue because we do revenue sharing with gig platforms that help us drive these financial products to their user base. And more importantly, we do a lot of cost saving for them. So something that I do a lot when I speak with the business development leaders of these gig platforms, they always tell me, I hate having to have my staff focusing on something that is so far away from our core as it is financial products. Because again, they have to be talking with vehicle manufacturers and
Yeah.
vehicle financing institutions. And I tell them, like, that is exactly our core.
Yeah.
We are a huge CRM that we are offering you for free. And some of these gig platforms are now, what they're doing is, when a huge fintech that wants to finance motorcycles for couriers or cars for gig workers approaches these gig platforms, some of them are diverting them to us and saying, can you just speak with Bankuish? They're the ones managing kind of like our financial portfolio for gig workers, because it's in their interest to do a good job, to offer the right product to the right gig worker.
Yeah, no, I think the vehicle supply is a really good example of one, because that's sort of a loan that is allowing a driver to invest in their business, to improve. So, like in the context of these platforms, obviously, if they have more drivers than vehicles, they can get more people on the platform, more people working. And then I think, to me, the other thing is kind of around stickiness, but also more what I would call retention. I think that it's pretty well known that retention is very poor in gig economy in the US for sure. I imagine LATAM, I don't see why. Maybe it's even worse. I don't know off the top of my head. But if you do have that, if you are driving and you do get into an accident, or you get into something where you have a $500, $200, $300 expense and you don't have that money, obviously you can kind of potentially use kind of that stopgap type loan. So it's like, to me, I feel like those are the two situations that like jump to my mind as far as, where it's beneficial, obviously to the workers, but also the platforms, like why they would care about it.
Exactly. The worst case scenario for a gig platform is for a user to go to the app, try to find a ride, and there's no drivers around.
Mm-hmm.
So they need to make sure that there's retention, so that they're there constantly. And that right now, like, I'm very close to a lot of these gig platforms, so I know what they do. They have this, because it's a lot more fragmented than in the US, they have this very complex mystery shopping system where they're constantly seeing where one platform is doing a promotion where they're paying more to drivers, and they make sure not to do it there, because then they're doing a price war and no one wins. So they're going to use their budget somewhere else, and then they switch it and swap it. And that very intricate system is very costly, and it's very ineffective, because in the end, you're basically training your earner force to just wait for the bonus that someone is offering for the platform that is doing the promotion, and go there and work on that one for that time, and then do the other one. So we're offering a more sustainable solution, which is, hey, if you join via your gig platform too, you're going to get these financial products that are going to be starting to unlock for you, because you are dependable, because you are someone that is really on top of this, that is serious, and that is what banks want.
So are there any adjacent verticals? I mean, now that you've got all these partnerships with all these platforms, are there any adjacent verticals where you think that this kind of gig credit score model can provide additional value? Like, I think the unfair deactivation, this is like a top issue for drivers in the US. And I feel like that score, if companies use that type of score, it's like, oh, wow, this guy probably didn't do something bad. Let's give them the benefit of the doubt while we investigate, instead of sort of assuming the worst. So that pops to my mind. Are there other areas that you've been thinking about or want to explore in the future with platforms now that you've got this in?
Yes. So because we've managed to sit down with all of the major platforms, and there's so many in Latin America, a pet project of ours where we don't really know if there's going to be anything monetizable for us, but I think that gig workers would be much better served if we managed to get that to work. Is the problem with gig platform is that they only have the data from their own account. Mm-hmm. So if one gig worker is working for 4 platforms, and on average our users are connecting 2.7 platforms, so that's a lot. They only get 1/3 of the story at least, and we want to be able to find a way where they would all be comfortable with us offering some key identifiers of dependability for these gig workers. We, again, want to work with the gig platform, so this is a conversation, but the objective here would be that they might be able to identify the stellar workers, even if they're sometimes disappearing from the platform. It's not because they're not working, it's because they're working for this other platform, and that can help the reputational score of these gig workers.
So I think there's certain things, like, to my mind, like a background check. If you go drive for Uber or Didi, you have to do a background check at each company, like kind of silly to do one for everyone. You can standardize that. You do one background check, and that applies now to every company that you want to work with. A vehicle inspection, I think, could be similar. And so I think there's some savings there. So I think there's a few kind of that nature that are less competitive. But I'm curious, how do you think about the top driver on an Uber platform, like these, like right now, like you said, right, a lot like what we see in the US on ride hail especially, right, is that Uber versus Lyft is they're basically sending out weekly trip-based bonus offers, competing for the best drivers, for the power drivers, kind of competing on a week-to-week basis. Do 80 trips, you get a $200 bonus. Do you see any opportunities? Like, what would be a real, I guess I'm trying to think of a way where like companies would somehow work together or fight differently over those top drivers.
Yeah, so this is my passion, Harry. This is the kind of conversation our leadership team at Bankuish has all the time. So we have tons of ideas. Here's the thing.
Well, give me your best
right
one.
Now, no, I mean, we have so many. So right now, the other day, I was discovering that in TikTok, in Brazil, there's quite a bit of driver influencers. They have they tell you kind of like how to go to the right spots and make the best use of your time.
Yeah.
And a few of them picked up on Bankuish and they were explaining how to use Bankuish. And they explained it a lot better than any of our FAQs, any of our documents, because they were like, I know that you make more than me, so why is my Bankuish score higher than yours? That doesn't make sense. And because we've created a Bankuish score to simplify, very much like the FICO score, and they were like explaining it. It's like, oh, because banks care about stability, and you make more, but you sometimes make less. More, it's all over the place. I'm very consistent, and I believe that if we can find a system that is helpful, it has to be fair to gig workers, that is helpful for them, because that's the whole point, to derive the consistent, the constant good workers that have a good work ethic, which is most, to be able to support those to get better features, better results in their work, better payouts. That would help the gig platforms. That would help the banks identify these amazing workers. And obviously that would help the gig workers.
Yeah, I guess I like the idea of you kind of being able to highlight, if companies are coming to you, say, who are the best drivers, who are the most reliable, we want them, we want to pay them more. I think that's kind of very mutually beneficial. And actually, we have had one of those Brazilian Uber influencers on the podcast before, Uber Pensador, Francisco Bianchi. I'm looking, he's got over 100,000 followers now. So I don't know if he would come back on the podcast now that he's so big time, but I do. He does tag me on Instagram occasionally, and we always add about 20 or 50 Brazilian followers, and they probably realize, like, why the hell am I following this guy? He never says anything in Portuguese, but really cool. And I think this is really exciting because I think this is something that when you guys first came to me and explained the concept, it was like instantly clicked in my head, and kind of just a matter of time before someone did it and I wish you would have started with the US first personally, but maybe it'll be better in the long run that you started with the tough market in LATAM and you're coming to the US. Anything else you want to mention if folks want to learn more about Bankuish or kind of follow along on the journey in the process? Where should they go?
Of course, yeah. Just look us up at bankuish.com and at Bankuish on Instagram and Twitter and Facebook. And yeah, I'm very thankful, Harry, for the time. I hope that in the end, we're delivering value to gig workers. We always say that there is an inefficiency in this system, and we're just trying to create that efficiency because the result is just not fair. So yeah, just hoping that we can add a little bit to
well, I think this is also a product. I think I spend a lot of my time these days on kind of products that benefit both platforms and drivers, right? Obviously, drivers want to make more money. Companies want to pay them the same or maybe even less, right? So there's always that inherent tension. So anytime you can find products, services where it's sort of more down the middle, delivers a lot of value, high perception of value, I think it's really beneficial. So yeah, I'm definitely excited for you guys to keep growing and coming to the US. And before I let you go, do you have any questions for me about Uber, Rideshare, or anything on your mind?
I actually have one comment.
You have one question, actually.
I have one comment now that I think about it. I think if you have any Brazilian following, so next week we are celebrating the Dia do Motorista, the day of the gig worker.
Cool.
And we're going. There's this narrative that we've heard a lot. Like a lot of these drivers, they take their clients to the docks where they go on these boat tours, but they've never gone on the boat tours themselves. And we heard that so much that we decided to book a boat and invite. We have space for 220 drivers, so we've invited all the drivers that we know in Rio de Janeiro to just go on a boat ride and actually enjoy the beautiful sunset in Rio from the ocean, because they work very hard taking all the clients there, but then they don't do it themselves. So yeah, that's next week for the Dia do Motorista. Very cool. To you, man, I guess my question is, when are you expanding to Spanish and Portuguese for LATAM takeover?
Well, I mean, I will say, I was going to say, we have also interviewed Luis Neves from Stop Club, which I know is a big app, I think, with a couple 100,000 users in Brazil. And actually, he just emailed me the other day with a few updates that he wanted to talk about. So that's cool. I think we're definitely testing a lot of Spanish content. I just went on a YouTube channel called Delivery TV from another guy named Luis, a lot of Luises, and Luis Berti. And he's got a big delivery channel for YouTubers. And so he covers basically American delivery companies, but all in Spanish, since obviously there's a lot of Latin Hispanic drivers out there in the US that, where English is their second language. So all of his videos are in Spanish. So we're definitely testing and dabbling in a lot of Spanish content, because I think one thing that I've sort of seen is that the job of gig workers, transportation, logistics, it's kind of all the same. You're getting a person, an object, a meal from point A to point B, sometimes to point C. Obviously, in different places, different jobs, things are magnified. You might have to do more work at the pickup point or more work at the drop-off point, depending on the type of job that you're doing. But I think at the end of the day, it's kind of the principles are all the same. So I think we're definitely experimenting. We've had a few videos in Spanish on the YouTube channel, and we've hired a couple contributors to do some Spanish videos. But yeah, I haven't quite cracked the code, but I'm always interested to learn, because I do think some of these trends, like with what you guys are doing in LATAM, this is just a no-brainer to eventually come to the US, and sounds like you guys will be the ones to bring it. So I'm excited to see it, and we'll have to have you back on when the product is live in the US.
I can't wait for that launch day with Harry Campbell.
All right. Thanks, Jose. Take care.
Thank you so much. Bye-bye.